As of this exact moment, Datavault AI Inc., ticker symbol DVLT, is trading right around the $1.79 mark, seeing a sharp intraday pullback of approximately 5.8% as the market digests the recent volatility. If you are watching the charts on your Fidelity mobile app or tracking the Level 2 data on the interactive brokers trading screens, you are seeing a classic battleground scenario unfolding in real time. The volume is ticking over, but it is not just about today's red candle. It is about the context of where this stock has been and where the narrative suggests it is going. We are looking at a stock that has experienced a mind-bending surge of over 500% in the last 3 months, only to face the harsh gravity of short-term profit-taking and skepticism today. The expectation from the average retail trader scrolling through Robinhood might be that this is just another AI penny stock pump that is running out of steam, a company slapping a trendy buzzword on its name to catch a bid. That is the easy assumption to make when you see a small-cap tech name showing this kind of erratic behavior. However, the reality of what Datavault is constructing underneath the hood suggests something far more complex and potentially far more disruptive to the legacy data infrastructure than the current price action implies. This is not just a volatility trade, it is a stress test for a company claiming it can generate hundreds of millions in revenue from the tokenization of real-world assets, a claim that the market is frantically trying to price in or rule out right now. When you look at a stock like DVLT, the immediate reaction is often dismissal due to the sheer noise surrounding it. You might compare it to the stability of owning Apple stock or the proven dominance of Nvidia stock and wonder why anyone would bother with a microcap exhibiting such violent swings. But that comparison misses the point entirely. The expectation here is that Datavault is simply a data analytics firm. The reality is that they are positioning themselves as the rails for the next iteration of the digital economy, specifically the valuation and monetization of data as an asset class itself. We are seeing a clash between the old guard view of data as merely a byproduct of business and Datavault's thesis that data is a currency that can be audited, valued, and traded. Today's 5.8% drop looks like a stumble, but when you zoom out to the weekly time frame, where the stock has still held significant gains, and the quarterly time frame where it has exploded upward, the picture shifts. You are not looking at a dying ember. You are looking at a volatile formation process of a company pivoting from its legacy as WiSA Technologies into a completely new beast. This pivot is messy, it's confusing, and it is precisely where the opportunity for deep analysis lies for those using Schwab Intelligent portfolios or managing their own individual brokerage accounts. Let's get into the specifics of the recent movement because the tape tells a fascinating story. The stock is currently consolidating after a massive run-up fueled by a series of high-profile announcements that frankly sound too big for a company of this size. We have seen news regarding a massive financing deal with Silex Holding Company, involving not just cash but Bitcoin, which immediately aligns Datavault with the crypto-adjacent sectors that attract aggressive capital. When a company announces it is closing a tranche of financing valued in Bitcoin, it sends a signal to the algorithms and the high-frequency traders that this is no longer just a software play, it is a digital asset play. This explains the correlation disconnect we sometimes see between DVLT and the broader NASDAQ. While you might be comfortable holding Fidelity mutual funds or Fidelity ETFs that track the broader tech sector, DVLT is moving to the beat of a different drum, influenced by crypto sentiment, AI speculation, and speculative small-cap fervor. The drop to $1.79 today likely represents traders selling the news after the recent adrenaline rush, locking in profits from that 500% quarterly gain. It's a healthy, albeit painful flush of the weak hands who entered the trade late, expecting a vertical line up forever. But what exactly is Datavault AI? This is where we need to strip away the hype and look at the business model. If you are using investing sites to research this company, you might be confused by its history. It was formerly known as WiSA Technologies, focused on wireless audio. The pivot to Datavault AI is a fundamental shift in identity. They are now focused on the monetization of data. What does that actually mean? In simple terms, most companies sit on mountains of data, customer interactions, logistics logs, proprietary research that sits dormant on servers, costing money to store, but generating zero direct revenue. Datavault's technology, including their ADIO platform and Verify You system, is designed to ingest that data, assign it a tangible value, and effectively tokenize it so it can be used for financing, licensing, or direct sales. Think of it as turning the intangible goodwill of a company into a tradable asset. This is the real-world asset, RWA narrative, that is taking the crypto and fintech world by storm. If they can successfully pull this off, they are not just selling software. They are creating a new liquidity layer for the global economy. This is why you see them partnering with entities like the World Boxing Council. It's not just about boxing, it's about taking the massive data exhaust of a global sporting organization, fan engagement, historical archives, fight metrics, and turning that into a revenue stream. The Silex deal demands closer inspection because it is the catalyst that has kept the stock in the spotlight. Silex, a biotech company, didn't just write a check. They engaged in a complex transaction involving pre-funded warrants and Bitcoin. This partnership is supposed to help Silex launch a biotech exchange, leveraging Datavault's tech to create a data-driven marketplace for the biotech industry. If you are sitting at home, managing your Fidelity investments or checking your SoFi active investing dashboard, this might sound like a lot of corporate word salad. But here's the translation. Datavault is trying to prove that their tech works by applying it to the massive, data-heavy biotech industry. If they can help a company like Silex monetize their research data, it validates the platform for every other industry, from energy to insurance. The market's skepticism, reflected in today's price weakness, comes from the execution risk. It's one thing to sign a deal. It's another to generate the cash flow. And speaking of cash flow, the company recently raised its revenue guidance for fiscal year 2026 to a staggering $200 million. For a company that reported just under $3 million in revenue for the most recent quarter, predicting a jump to $200 million is audacious. It's the kind of projection that makes conservative investors on interactive brokers platforms scoff, but it's also the kind of blue sky target that attracts the growth at any cost crowd on Robinhood stock trading forums. Let's pause here for a second. I want to hear from you. Comment below if you think this $200 million revenue target is a realistic goal based on their current pipeline, or if management is just trying to pump the stock price with aggressive forecasts. I read every comment, and I am genuinely curious to gauge the sentiment on this specific update guidance. Now let's look at the risks, because they are substantial. When you're dealing with a company trading under $2, you are in the high beta zone. This means the stock is significantly more volatile than the market. If the S&P 500 sneezes, DVLT catches a cold. If the S&P 500 rallies, DVLT might run a marathon. The financials, historically, have been ugly. We are talking about significant net losses and a cash burn rate that historically has required constant capital raising, hence the Silex deal and other equity financings. Dilution is the silent killer of returns for the individual brokerage account holder. Every time the company issues new shares or warrants to keep the lights on, your slice of the pie gets smaller. The recent excitement is built on the hope that the revenue tap is about to turn on and stop the bleeding. If that $200 million figure turns out to be a mirage, this stock could retest its lows near 25 cents very quickly. Conversely, if they start showing quarter-over-quarter growth that tracks toward that number, the current price of $1.79 will look like a historical anomaly. This binary outcome, boom or bust, is why investment help services and SoFi robo-advisor algorithms usually steer clear of these names, leaving them to the active traders who thrive on risk. The competitive landscape is also fierce. Datavault is competing for attention against massive players. While they are not directly fighting Tesla stock or Apple stock for market share, they are fighting them for investor capital and attention. Why would an institution put money into a speculative data monetization firm when they can buy established AI growth? Datavault has to prove that their specific niche, RWA tokenization and data valuation, is a unique moat that the giants can't easily replicate. They are betting